Now, since I already talked about how much money I lost by selling crypto too early, I'm going to do the same with stocks and find out how much gain I missed out on by selling way too soon. And this is one of those randomly specific videos that most of you guys won't find any use for. But hey, I enjoyed making it, so I hope you find some enjoyment watching it as well. Because the worst thing about making YouTube videos is, you have to make YouTube videos. And sometimes I just have so many video ideas, it just ends up giving me writer's block. So naturally, I logged on to my M1 Finance accounts for the 100th time this week to check my total balance. And right now combined, I currently have a balance of $38,317.11. And it's really amazing to think I started off with just a $19.99 investment back on September 6th of 2018. And thanks to M1 Finance fractional share purchasing feature, that $19.99 was spread across 92 different stock positions, which looking at now, was way too many positions to hold. And I've sold off the majority of them over the past 2.5 years. But now let's look back to figure out how much I would have been up or down if I had kept invested in those 92 different positions. So all you number and data nerds out there, get your calculators and clean up your prescription glasses, and let's just dive right into it. And the number to beat is $39.99, my portfolio's total return calculated at the end of April. We're not going to be doing the entire 92 stocks because 2 of them, Tiffany and Dunkin brands, are no longer publicly traded. Tiffany was acquired by LVMH earlier this year, and Dunkin brands was bought out by Inspire Brands. I'm also going to take out IAC as well because their price history was readjusted when they spun off Match Group last July. And finally, I'm going to take out the following 15 companies since I'm still invested in them. Those 15 companies being Apple, MasterCard, Ferrari, Boeing, Square, Tesla, Alphabet, Costco, Visa, Alibaba, Facebook, Disney, Amazon, Microsoft, and PayPal. So of my original 92 stock buys, we're left with these 74 companies, and to make things more exciting and make myself feel a bit better for missing out on some of the massive growth, let's start off with the worst returns and work our way up. Now we have lots of companies and numbers to get through, but starting off in last place, we have Carnival Corp down 59.52%, Canopy Growth Corp down 57.07%, Macy's down 49.08%, Cronos Group down 40.158%, Six Flags down 39.38%, WWE down 38.30%, Nordstrom down 37.69%, Simon Property Group down 32.75%, Canada Goose down 32.4%, Delta Airlines down 22.67%, Walgreens down 19.77%, Altria Group down 17.74%, Anheuser-Busch down 16.47%, Tapestry down 4.8%, Southwest Airlines down 3.18%, and Wynn down 1.33%. We're done with the losers, and we have our first gainers in 58th place. We have AT&T up 0.28%, Under Armour up 3.2%, Verizon up 8.69%, Constellation Brands up 9.11%, Marriott up 13.17%, Ulta Beauty up 13.46%, Booking Holdings up 16.06%, Intel up 16.28%, Coca-Cola up 19.23%, Electronic Arts up 21.08%, Philip Morris up 24.3%, Activision Blizzard up 26.98%, Take-Two up 27.92%, PepsiCo up 30.02%, Expedia up 30.2%, Public Storage up 30.77%, Wendy's up 30.8%, Foot Locker up 32.05%, Berkshire Hathaway up 34.04%, Vanguard Small Cap ETF up 34.24%, Vanguard Healthcare ETF up 35.04%, Bank of America up 35.58%, CSX Corporation up 36.81%, which brings us to my current portfolio up 39.99%, Vanguard Midcap ETF up 40.17%, McDonald's up 40.19%, Netflix up 41.50%, JP Morgan Chase up 42.47%, Ecolab up 44.43%, Walmart up 45.59%, Mondelez International up 46.68%, Union Pacific up 46.91%, Republic Services up 48.81%, Best Buy up 52.19%, Monster Beverage up 52.70%, Waste Management up 54.60%, Planet Fitness up 56.99%, Kroger Dr. Pepper up 57.56%, Home Depot up 57.79%, Workday up 57.85%, Crown Castle International up 59.04%, American Tower up 66.50%, Nike up 69.28%, Twitter up 69.66%, Caterpillar up 69.88%, American Waterworks up 72.30%, eBay up 52.82%, Prologis up 72.71%, Micron Technology up 77.66%, Lowe's up 81.50%, Starbucks up 102.70%, Nvidia up 109.56%, Estee Lauder up 109.71%, Target up 137.95%, Deere & Company up 156.12%, AMD up 166.95%, Chipotle up 174.40%, Snapchat up 433.64%, and finally in first place we have Shopify with a 671.48% gain I missed out on by paper handing. Now that was a lot of percentages, but don't worry, here's a nice spreadsheet of all the numbers, so let's dissect the data and come up with some random conclusions about the 74 stocks I sold way too early. Because in relations to my portfolio return of 39.99%, 35 companies, they had a higher return while I beat out 39 stocks. And if it wasn't for the pandemic devastating certain industries, I'm sure the ranking would have been wildly different. But the bottom 10 were made of retail and tourism names like Delta, Canada Goose, Simon Property, Nordstrom, WWE, Six Flags, Macy's, and Carnival. And the two marijuana companies I held, which were Cronos Group and Canopy Growth, had terrible returns overall, both spiking back in 2019, but with lots of states already legalized and a high chance of federal legalization coming soon, we'll see if they're able to recapture their peaks in the coming years. And on the other end, there was a few surprising names in the top 10 gainers. Of course, we had the usual tech names like Shopify, Snapchat, AMD, and Nvidia, but the other 6 slots were made up of companies that had relatively simple and easy to understand business models. A Chipotle, a restaurant that sells burritos and tacos, it was up 174%, and a farm equipment manufacturer was 5th place, a retail chain was 6th place, a makeup company in 7th place, a coffee company in 9th place, and the home improvement chain finished off the top 10. Which all goes to show that you don't always need to find the next pick stock name to see massive returns. And the other takeaways included the 3 video game makers, they traded close to each other, averaging a 25.33% return, and apparently it's sometimes better to buy a product manufacturer than a retailer that sells them, as is the case with Estee Lauder's gains compared to Ulta Beauty, and Nike being a better buy than Foot Locker. And these so-called vice stocks in the alcohol, tobacco, and weed industry, they performed relatively poorly compared to the other sectors, averaging a return of 16.34%. But if you were to invest in the tobacco industry, for example, choose ones targeting international markets like Philip Morris, rather than ones with a domestic footprint like Altria Group. But the airlines are the opposite. With the pandemic devastating the tourism industry in general, it was a better choice to pick a domestic-focused Southwest, which fared much better than Delta Airlines, who generate a bulk of their profit from international travels. But let me know what are the trends you can see from this spreadsheet. But to wrap things up, the average return for the 58 gainers was 70.54%, while the average return for the 16 losers were negative 29.52%. And combined, the average return for all 74 stocks was 48.91%, giving my very first trade on M1 Finance a better return than my current portfolio return of 39.99%. So yeah, maybe I should have just kept my original stocks instead of trading in and out of different stocks. But I'm not even 3 years into my investing journey, so let's see if I'm able to get a higher return in the next few years. But if all else fails, I know what to do. I can finally maybe choose to listen to Warren Buffett's advice and buy an S&P 500 index fund. I think this is a nice way to end the video, so, thank you for stopping by. Happy investing, and I'll catch y'all next time with more financial shenanigans.